You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas.
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today's Tuesday, 17th day of March, 2020. I guess that makes it St. Patrick's Day as well. Happy St. Patrick's Day. Thanks so much for joining us, whoever you are, wherever you are. We're just glad to have you right here, right now. If you can't see the screen I have up, go to our homepage at CFRN.net on the right-hand side of the page. Click the big microphone, follow the instructions. You'll be registered in about 30 seconds. And that'll give you one-click access to the show each and every day. On the days you're out of the office, away from the desktop, not to worry, point any internet-connected browser to cfrn.net/live. There you'll find a live, real-time simulcast of the show as it unfolds. You'll also find us streaming live on YouTube, Twitter, and even Facebook. So, there you go. There's all the ways to connect with us. let's take a look at the daily chart of the S&P 500 Emini Futures. Okay, so we drew fibs yesterday, and we know we came very close to a 100% Fibonacci retracement down at 2320 to use a round number. The swing low yesterday was 2350. Swing low today, and by today I mean the session that began last night at 6 p.m. Eastern. Swing low today is 2352. 2-point difference. And what a difference a couple of points can make. This has the makings of everything you'd ever thought a turnaround Tuesday could be about. Here's what price has to do. It has to continue to march north. It's going to run into red and falling. That represents an obstacle. If you take a look at this move down, price here bounces back to red and falling, gives way. And then as we move down, we pull back into red and falling, and that leads to another down day. And here we are today attempting to connect with red and falling, but the question is when they meet up, what happens then? Will we be able to overcome it? Get on the other side? If so, then we begin to build a leg up to the BBC. And we know that when price runs into the BBC, whether it's from above or below, it has a tendency to hold more often than it doesn't. So it could create something that looks a little like this, where we make a leg up to red and falling, back off, but not going back to the lows, hit it again. This time we get through it, make a run at the BBC. That also gives us a pullback, but we don't go back to test the lows or the top of red and falling. And then we actually get above the BBC. If we can see this market get back above this critical area right here, where we had all this consolidation. 1, 2, 3, 4, 5, 6, 7 days of consolidation. If we can get above that, hold it on a pullback, then everything else is just a walk in the park. Now, there's a live speech going on right now, or discussion from the White House. A lot of measures have been mentioned. To help the American people, to help American businesses. It's pretty far-reaching. So with all that they're throwing at this virus and the devastation it's leaving in its wake, number one, that's good. And number two, I just hope there isn't more than we know about. So we won't go down any conspiratorial trails. We'll just open with a word of prayer. Father, we just pray today that you would continue to hold this situation in the palm of your hand. We all know people or have friends or loved ones who have been physically touched by this virus. But as a people, we come together, we care for one another, we love one another, we put others before ourselves, as you taught us. And again, we put it in your hands. We pray for healing, we pray for safety, and we pray for wisdom for our leaders to make the right decisions for your people. We thank you in Jesus' name. Amen. All right, let's take a look at the numbers from around the world. We'll start here in the U.S. Currently the Dow up 1,118 points. NASDAQ up 400, that's a 5.5% gain. NASDAQ up 488, 7%. S&P 500 up 162, that's almost 7%. And the Russell 2000 up 41, that's a little over 4%. In the commodity basket, crude oil up 36 cents, trading 29.06 last. Gold up $51.40, trading 15.37 last. That's a gain of almost 3.5%. In the Asian markets, Nikkei posted a gain, 9.5 points. Shanghai dropped 9 points. The Hang Seng gained 200, almost 1%. And in European markets at the close, FTSE added 8, 1.5%. I'm sorry, make that 87. The DAX gained 160, almost 2%. The CAC added 85. That's a little over 2%. That gives us a mixed day in Asia. It's a green day in the UK. And so far, it's a big green radio turnaround Tuesday here in the US of A. I don't know what all these pop-ups are about, but we'll get them out of there. All right. So there you have it. Those are the numbers. Michael? Sounds like
I am.
John just rang in, so I don't know if you want to go first. Do you want to let him go first? It's up to you.
No, I'll go first. The markets were just nuts this morning. And for most of the morning session, I only put the euro and crude oil up. And that's not to say that we didn't do well on the other markets. We actually lost money on crude. But hang on, let me move this over here and get everything ready to go. Okay, here we go. New tab. Hang on. Oh, here it is. I do have it open. Good. Oh, well. I don't know what just happened. But I do have it open. Right there. Okay. All right. I'm ready to go. If you're ready. Here we go. All right. Good afternoon, everyone. Today is Tuesday, the 17th day of March 2020, St. Patrick's Day. If you have not taken a free trial with us, go to the homepage at CFRN.net, and anywhere in here it says free 5-day trial. You can click on that, and it will bring you to this page, where all we ask for is your name, your email, your phone number, and you can tell us your biggest trading challenge so we can tailor one-on-one training just for you. Hit the send button, and you will be sent a confirmation link. Okay, you must click on that confirmation link because we don't know you took the trial until you click on it. All right. Now, the spreadsheet goes back over 7 years. Hey, John. Let me just get through this and then we can get into discussion. Spreadsheet goes back over 7 years. Today, as I said, is the 17th day of March 2020. Today we made 18 ticks in the euro. We lost 8 ticks on crude. We made 50 ticks on gold and 8 ticks on the ES. So we're up 632.50. Today it took 22 minutes and 2 trades to get to the goal for the day. At that point, we're up $100 a contract, and we took a total of 8 trades. So on the month now, we're at $7,190 a contract. That's over 12 days, averaging $599 per contract per 2-hour day. On the year, we're at $14,142. That's over 48 days, averaging $294 per contract per 2-hour day. Okay. Now, there was so much activity today. I'm just going to back it way out and just say on gold, we had one trade that went 40 ticks. We had another trade that went 10. There were a ton of other trades in there, but it was jumping around so fast, and I couldn't focus on the trading and the questions and all the other stuff all at once. So I'll just scroll back to where we took a couple of trades that we did take. We had one break-even trade too. But you see all this crazy action right here? I mean, gold is trading so thin right now. You see that? If I were to put on a 50 contract trade, it would wipe all those out. And that's what's making things like this happen right here. That, then the retracement, then the retracement. It's just insanity. But let me go back. Okay, it's loading up data right now. Well, anyway, you know what? Rather than try to do that, I'll just tell you, we had one trade that was 40 ticks and one trade that was 10. And we ended up with plus 50. We had one break-even trade as well. On the euro, we had just a couple of trades. Now, the euro was more tradable. We had 4 ticks on this one we picked up. And, you know, I highlighted a couple of other ones that were showing up. But it was just, you know, insanity. The first one here was 14 ticks. The second one was 4 ticks. Okay. Now, let me go here to crude oil. Because on crude, we only had one trade and we stopped out. There were a bunch of trades that were triggered, but things were moving around so fast, it was just hard to do anything. And the one trade, this one, I should have gotten a break even on this, but I couldn't move it fast enough. And so it stopped me out. But it should have been a break even trade for me. But I took a little loss on that one. Right in here, you can see there was a trade right there. And the ES, what did we do with the ES? 2 trades, plus 8 ticks. So one of them was a break even. I'm just going to tell you because the ES is as nuts as gold was. We had 2 trades. One of them was a break even, and one of them was plus 8 ticks. And let me bring that over. Okay. And this. So, if you have not taken a free trial with us and you want to take a free trial with us, go to the homepage at CFRN.net. Over here in the right-hand column, it says apply.cfrn.net. If you click on that or any of these free 5-day trial things down here, click on any of those, and you will be brought to this page where all we ask for is your name, your email, your phone number. You can tell us the biggest trading challenge so we can tailor one-on-one training just for you. And we really do the one-on-one training. I have some this afternoon, as a matter of fact. Hit the send button and you'll be sent a confirmation link. You must click on the confirmation link. Okay, we don't know you took the trial if you don't click that link. Now, the other thing that I want to show you is the spreadsheet. Now, we have, how many days do we have left in the month? Let's see. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 days left. So we're about halfway through the month. A little over halfway through the month, and we're up $7,000 right now, $7,100. If you're going to read the spreadsheet, you could read all the CFTC risk disclosures down at the bottom. Today is the 17th day of March, 2020. We made 18 ticks on the euro. We lost 8 on crude. We made 50 on gold and 8 on the ES. Put us at plus 632.50 per contract for the morning session. Today it took 22 minutes and 2 trades to get to the goal for the day. At that point, we're up $100 a contract, and we took a total of 8 trades. So as I said, We're up 71.90 on the month right now. That's over 12 days, averaging $599 per contract per 2-hour day. On the year, we're at 14,142. That's over 48 days, averaging $294 per contract per 2-hour day. Okay, and with that, we can pass it back out to fabulous Phoenix, Arizona. Dwayne, if you are ready. Okay. Do you want me to open up John's mic?
Please.
Okay. There. Okay. This mic's open.
I think still, it's too early to define these airline stocks.
Okay.
You can hit his mic. You can hit mute for a minute,
Yeah.
and I'll ring him up.
Okay. Yeah. He put a 1 in the
Yeah, I saw that.
box.
That must be a code.
Probably on the phone. 1 minute.
All right, I rang his phone, so he knows we're here. So I guess we can go ahead and open his mic back up.
Okay. Hold on. Let me do this.
I got it.
There we go. Mic is back open.
All right, John, your mic's open whenever you're ready. Okay. All right, let's take a look at smaller time frame here.
Yeah, I was looking at different time frames this morning too.
All right, here's our 30 minutes that we rely on. Guys, I want you to take a look down here at this ATR. Okay, I talked about it last night. I talked about it yesterday. I talked about it in the Telegram channel as well. Write down the average range of a 30-minute candle. It's 51.3. That's 51 points. Now, this is the default look back window, 14. So that's just the last 14 30-minute candles. If we spread that out a bit and look at 100 30-minute candles, then the average range of a 30-minute candle going back 100 candles is still almost 31 points. Now, many trading strategies out there use the ATR for establishing your stop loss. A rule of thumb with many strategies is that you want to risk 1.5 times the current ATR. So in this case, if we spread the risk back, not just over the default look back period of 14 candles, but we actually look back over 100 candles to smooth it out a little bit, that would be a 45-point stop loss. Think about that. Under normal conditions, the average true range of a daily candle in the S&P 500 E-mini is 20 points. So when I say we're living in the land of giants, we truly are in the land of giants here. Now if we go over to our daily, I don't think I have the ATR running, but here's how you do it. If you use DT Pro, and almost every trading platform has this tool, just go to indicators, volatility, average true range, and I've got the daily set at 48 because there's 24. Well, here's how I did it. There's 24 hours in a day, so there'd be 48 30-minute candles. It's just a number. Let's use the default look back period, 14. That's the range of the average daily candle. Looking back 14 days, because we're on a daily chart now, versus 30-minute. Average daily range is 10 times what it is under normal market conditions. So now let's take this one back. Let's smooth it out and just put 100 in there. 100 is just a number. So now we're going to look over the last 100 days, a little over 3 months. Now that tames it quite a bit. That brings it down to 56 points. Average daily range over the last 100 days, from the low of the day to the high of the day. 56. Until that number changes, trading is extremely difficult unless you have an extreme skill set. As Michael just showed you, he went into the live training room this morning. He used our methodology. He was able to put points on the board, reach his goal for the day. Can be done. But, trading's not easy under the best set of conditions. But under these conditions, whoa, it can be a challenge just to make it simple. But that's what we continue to do. Go ahead.
I was going to say, it was, it got so bad with the gold and the ES that, I'd see something and I couldn't even get the words out of my mouth before it happened. In this small time frame that I work in, I couldn't even get the words out of my mouth. I actually went to a 1 minute chart across all markets, and that was still a mess. And I'm not used to doing 1 minute charts, so I went back to my range charts, and it's just a little bit crazy.
There he is. John, welcome to the show.
Happy St. Patrick's Day to everybody today.
Yeah, happy St. Patrick's Day.
I hope everybody's in good health. Having a bit of a trouble myself, but other than that,
do you have a fever?
I'm a raspy voice today.
Do you have any fever, John?
A little bit, yeah. Kind of a little bit worried because you never know when you pick this thing up or not. So taking precautions. Anyway,
is there any testing facilities near where you are?
Well, I'm working on that right now, so we'll see. But got some pretty good treatments lined up, so I'll kind of got some symptoms last night and just nipped it in the bud pretty quick. So we'll see how we go.
All right. We'll keep.
By the way, there is some good news to a fellow who's very, very up on things. There's a professor out of Stanford who's saying that this thing potentially has a 3 or 4 month cycle, and it could run its course sooner than you think. Unfortunately, because of the increase in cases, it's not there yet. But the Chinese, according to him, the Chinese peaked on February the 7th, and it's really been going downhill ever since over there. And the death rate is almost negligible now. So,
yeah, we've seen this thing play out in China, and it would seem as if, well, it's what you just said. It's seeming to have wound its course through China, right? So, how far behind the curve are we from China? I mean, are we a month behind? Are we 2 months behind?
I'd say a month to 2 months.
Okay.
No.
So then we should anticipate it getting worse before it gets better, but with the good news that it gets better.
Yeah, I think so. And look, the Thailand, I haven't checked the numbers today on Thailand, but yesterday, considering Thailand was right next door to China and probably got infections, very shortly after China, and they only have 118 cases and 1 or 2 deaths and most 70 or 80 recoveries. That's pretty impressive. And of course the temperature is probably got a lot to do with that. Maybe look, the market has a way of seeing things ahead of time. I know we had a really bad day yesterday, but we did say yesterday we thought there'd be a rebound today. I sort of said should start about early to mid-morning, and that's exactly what happened. What's interesting is the market sort of calmed down and it was fairly quiet this morning, wasn't too volatile, which was a sign that we might actually have a rally. Unfortunately, right now, this pullback, where we've given back half of the gains already, is a little bit of a concern.
Hang on now. I'm looking at a 30-minute chart, John. Which chart are you looking at? What are you looking at?
Yeah, same thing. Yeah, that's a bad problem, that reversal. But
Are you talking about this wick here?
Mhm.
Okay. Well, I mean, look at the price it fell. I mean, this is where we went. We went locked. We were limit down here, and I was surprised to see the market lock limit up last night. I mean, that is what this was about right here, correct?
Mhm. Mhm.
I'm not
The
positive.
strange thing is we only went up smaller
we're
amount
right.
of limits. It wasn't the bigger limits. Maybe they adjusted the limits or something.
Yeah. See, we're right at that area. So yeah, you're right. If we can't get above, I can understand this being an important price, important area. I'm just surprised that we were unable to hold above it. So we'll give another 30-minute candle here a chance. But yeah, after this run up, that definitely looks ominous. If we were to get a retracement off the low that was put in today, just up to this high, just an intraday. I mean, we could go back to 2447. That's a 50% retracement of just today's session, and then we could quickly recover and continue higher. So we'll hold that out as
Yeah,
a possibility.
it could come down to these numbers you've got there. What may happen, if they are really serious about getting this market higher, which I think they are. And remember, look, when they started QE, we coming off that 2012 period, very few people saw the market exploding higher the way it did in 13, 14, 12, 13, 14. So, the Fed, when the Fed gets in, I mean, we're zero rates, QE 5, QE 4, 5, QE to infinity. We've seen the first signs of QE this morning. I wouldn't bet against the Fed. In other words, look to buy dips when they're presented if they're good dips, but probably need to be selling rallies as well for the time being.
Here's the S&P index, John, 2012. You were just talking about.
Yeah.
It's the cash index here. And so are you saying this is when the quantitative easing came in?
Yeah. Oh, yeah, back then. Yeah, exactly.
Okay.
Yeah, exactly.
Okay.
That's
All
when
right.
it started. And it had a big impact. A lot of people never saw that rally coming. They almost nobody.
Well, because it came on the heels of this.
A bad sell-off already in 2011.
Yeah.
We had everybody. The fact of the matter is we had almost a 20% correction in 2011 from July the 25th or so. And we bottomed on October the 4th. And then the market took off and really never looked back. If you can put up Apple for a minute.
Sure.
I mean, Apple looks, when you look at that kind of a three-wave thing, if Apple can hold in here, I mean, look at that. I mean, it kind of looks like a bit of if we can get above 260, 270, this thing could start to look kind of constructive. And, Adobe is another one that went up a lot today.
ADB.
ADBE.
I think the part that's confusing for so many people is we hear about all this money that the government is going to throw at this problem. But if you turn, the station and listen to the other channel, then you're going to hear about how we're a debtor nation, how we don't have any money. We're basically a bankrupt nation because of our debt. I mean, obviously the truth lies somewhere in the middle.
I wouldn't worry too much about the debt right now, except it's going to
Well, no, because our Fed has the ability to just print money, which is good for gold.
Check out TTD, see how that looks.
TTD, the trade desk, okay.
Yeah, a little bit more, not as strong as these other stocks, but those leading stocks definitely have quite a good profile. if we can rally. But if we sell off the rest of the day, it's not going to be good. So
I heard a
but
comment this
again,
morning that this has been harder on the airlines than 9/11 actually was.
It is, yeah. No, it really is. It's brutal. You know, a guy just called me a minute ago and he asked me, "Is it time to buy the airlines?" And I said, "No," even though they're down. Like, you know, the airlines is down. Put out UAL. Wait and see how it looks.
Okay, it's daily.
You know, down a lot. But, you know, it looks like it's probably going to go down to 20, maybe 20, 15, 20, somewhere like that. And then it might reverse. Can you put up Newmont, NEM?
Mm-hmm.
Very, very big reversal going on in this stock today. And some of the other majors kind of, you know, implies that, as I said, you know, recently, whenever the gold is going up and the Dow is going up, or the market's going up, it's a sign the Fed is intervening. And, you know, I would say that if they've got a coordinated intervention going on around the world, pretty big, you know, we got a potentially big bottom in gold developing here. If we can get back up to 1500 today, that would look pretty good. As a matter of fact, 1550 is the number. We get about 1550. I think this thing is gonna accelerate.
Was that the
higher.
swing? Was that the swing high today? 15. Yeah, it was like 15. The high 1553.90.
Yeah,
Okay.
and this could happen overnight, you know, because they may take it up again tonight.
Well, we're up what, $50 on the session, roughly?
Yeah. So we were actually up 60, about 65 at one point. So I think that you know, I wouldn't say that the bottom is in yet, because this thing is very kind of volatile here. There could be a retest, but I think that the cards are on the, you know, the writing's on the wall now, because they're probably going to throw more money at this. The more money they throw at this, probably the bigger move up in gold eventually.
Right.
It's plain and simple. So.
Well, they're talking about deferring tax payments. I mean, they're just you know, putting and sending checks directly to Americans that need them, as opposed to it filtering down through a payroll tax holiday, just actually mailing a check. Now, if I'm not mistaken, George Bush did a thing where every American got a check, but it was $200, right?
Yeah, they need a decent amount.
I mean, it
sure.
was. I mean, I don't know what.
It was 400. I think it was 400.
Was it $400? Okay. Well, that's a little better. You know, I don't know what the. Let's see what the
So
average weekly paycheck in America. After blah blah taken into account, the median weekly earnings are $933, or about $48,000 per year. These are very general numbers, yes, because you know, some people make this much money while they're brushing their teeth without doing anything else, and others dream of making $1,000 a week. So, what is the average income in the U.S.? It's going to be painful. More so for those at the bottom of the ladder than those at the top, but everyone's going to feel it in one way or another. So, what else you want to look at?
I think really probably covered everything today, because there's too much kind of like distorted volatility going on. The VIXs, after a pullback, you know, they, like we said yesterday, there was actually a bit of a sell on the VIXs last night, and they just did take them a little bit higher But I wouldn't rule out another effort to break them down, because if they do break them down today,
Is this an all-time high in the UVX area?
yeah, yeah. And it still looks fairly bullish, that thing, that whole general structure. So, it may have 100 written all over it. I mean, if it gets it, the trouble is, if that thing gets to 100, we're probably going to go a lot higher, so.
Well, according to this, something must be out of whack here.
Oh, I tell you what's worth a look is the dust, the UST.
Okay, I'll go there. DUST. Okay.
Look at that spike, and I mean, that sort of tells you that a little bit more, and we start breaking down. Gold should be making, going substantially higher. That is just an amazing down spike.
Yeah, that's a
big rally.
pretty huge bearish engulfing candle.
Right. And the JNUG and the Nugget are the opposite. Now they got a hit, but they're certainly reversing upwards, and they're it's got a ways to go, but I think once it gets above like 15, 20, this thing could recover very quickly, and it potentially would be extremely bullish if this thing goes to back over 75. I mean, this thing could go to 150, 200 before you know it. So it could be a very, very good trade based on the way things are happening here. It really looks like, I mean, it's like I say, if we get that 1550 area gold, 1550 going on 1600, that's a monthly. It's just going to be like a gigantic booster to the metals, to the gold. And the way we're shaping up, it may take till Friday for that to happen. It may take till the end of the month, but I think it's on the cards right now.
Yeah.
So, good luck, everybody, this afternoon. Stay safe, and we'll catch you tomorrow.
All right, John. Thanks very much. Appreciate it. All right, guys, we're going to go over the Concierge Trade Alerts and all that. Give me just 1 second, and we'll go to that right away. In fact, let me put up on the screen a copy of last night's Concierge Trade Alerts, so you can grab a screenshot, and I'll be back in 60 seconds. All right. So we'll go to the S&P. I'll take these fibs off for now. All right, last night, I need to make sure all these charts are set on the proper time frame. Okay, that one needs to be fixed. I have to go through this twice a year. I go from UTC 5 to UTC 4 because Arizona doesn't do daylight savings time. Okay. Choose that one. Those of you who are in states that do observe daylight savings time, then you never have to worry yourself with doing this. No, we might as well put it on the right one. I know we changed some of these yesterday. This is one of them. Oh. Good news, we're almost done. Save my layout. Okay, one more. This one should be done. It's not. Okay. All right. So that covers them. What else do I got floating around out there? I'm not going to use that chart now. So, okay. Now, for those of you who use DT Pro, hopefully you know you're got to save your layout on a regular basis, right? So, just in case anybody doesn't know, you just grab this thing, which we call the control panel, go to File, go to Workspaces, go to Save As, and then I always just use today's date. 03 17 20. Okay. So now if my platform crashes or any other such thing happens, when I reopen, it's going to pull up that file. It's going to load the last workspace file that I saved. And because I use the tabbed version here, then it's saving all of that. Even the additional ones that I have, you know, as to use as smaller time frame triggers, that kind of thing. All right. Okay, so now back to the Concierge Alerts. Let me get those pulled back up. Last night they got out at 10:15 p.m. Eastern. So that's 22:15. So we need to find the 2200 candle. There we go. That's it. So this is when the alerts came out, during the life of this candle. All right. The alert said to consider being long at or above 25 15. You know what? Let's do this. $25.15. All right, pretty close. All right, so buy $25.15. Swing high is $25.42.75. The alert also said if price reaches $24.30, you want to consider being short. Okay. And as we know, important prices in important areas are almost always tested. Sell $24.30. Okay. All right, the initial trigger, the initial swing low. Well, actually, I mean, we do have a little bit of wick there, 24.27 and a half. So what is that, 2.5 points? Okay, it's 2.5 points. Price gets back above the trigger, and on the second trigger, we drop to a low of 23.70. So that's a 60-point drop. At $50 a point, that would be $3,000 per contract. So that's a $3,000 per contract move. Okay. Now, what I want to do here is I want to go under the hood. We're going to look at a smaller time frame because there was a question that came through yesterday. In fact, I think the question came from someone I have a mentoring session with later this week. How do I take the methodology, the strategy, the indicators, and then the alerts? How do I bring those all together to determine where I really should be entering the market and where I should be looking for these obstacles or targets, whichever you choose to call them? All right, so we'll break this one down, but while we're here, we got back above the trigger, right? We triggered again. This would be a third time. The swing low was 21 1/4, so we'll round that up to 22. So that's an 8-point move at $50 a point. So that little wick right there is a $400 per contract move. We're back above the trigger. This time we get a swing low at 23.95 half. We'll call it 23.96. So that's a 34-point move. Back above the trigger. More of the same, back above the trigger. Here was the big move to the downside. This swing low came in at 23.52. So let's round it to 50 just to make it simple. That's an 80-point move, or $4,000 per contract. $4,000 per contract move. Now, getting out of the swing high or swing low, we know, is difficult at best because there's no way to know if it's a swing high or swing low until after the fact. So, what are you going to do? Well, we'll go under the hood, so to speak. Let's see, what chart shall I use? I won't confuse you with this one. We'll manipulate this one and make it work. First, we'll get rid of these fibs. We'll get rid of any additional drawing objects. Make it the current contract. We have rolled forward now to June, to the M contract. So we'll come off monthly. We'll drop down to a 5-minute. Now this 5-minute, 30-minute combination, I think it's a fairly popular combination. I mentioned yesterday, when I first started trading futures, I was, like everyone else, I was looking for that edge, but I was looking for the edge via a secret. You know, there had to be some secret out there that if I could discover, you know, I would quickly own the world. Well, a lot of trial and error, and I came to the conclusion that as opposed to seeing what no one else could see, which seemed like, you know, really the smart thing to do, I was better served by looking at what the majority of people were looking at, or a very high percentage, okay? Because if I'm looking at what the majority of traders are looking at and basing whatever, or making a decision based on that information, I can apply logic and determine, you know, what the herd is most likely to do. So I went from trying to see what no one else could see to making sure I was looking at what everyone could see, and that what in fact a large majority of traders, you know, were looking at and basing their decisions off of. Because the market, no matter how tall or clever or handsome we are, the market is always just a little bit taller, just a little bit better looking, and always has deeper pockets. The market can remain solvent, liquid, far longer than any one individual trader. So that brings us to this 5-minute chart, very common chart for those who trade the S&P 500 E-mini. So we're going to shrink this down a little bit. And we're going to go back to that alert, but let's just take this real-time example that we have in front of us right now. Okay. In fact, I'll put the indicator on here for a minute, just to take it away in a minute. As a passport holder, partner, all CFRN family members own the indicator set for life. Okay. Now, our indicators, very simple. Our methodology is very simple. Most, well, yeah, I'll go with most. Most strategies, most methodologies, most indicator sets tend to be very complicated. The complication, it conveys to people the idea that because complication is good, but it's not. expensive. That's not good. But yet somehow it gives us the impression, well, if it's hard to understand and if it costs a lot of money, shoot, that must be really powerful. Well, whatever the methodology, the strategy, or the indicators are, just because it's complicated, just because it's difficult to understand, it's just because you got to take out a second mortgage to belly up to the bar, it doesn't make it better. Our little slogan, trading's not easy, but it can be simple. That speaks volumes. Okay? So our 30-minute chart last night, the initial trigger right here, which happened this morning at 4:30 a.m. Eastern. So again, this is the 30-minute candle during which the alerts were issued. If you didn't grab a screenshot, you need another shot, take a shot. Okay. Okay. All right. So move that out of the way. You bring the 5-minute back up. Now, right here, this little thumbtack, that pins this chart to the top. Stay on top. So when I click over here, this doesn't disappear. This doesn't go away. If I unpin it, then every time I touch this chart, that chart's going to vanish. So if you want it to stay on top, which for the purpose of this, now you could also accomplish this with different monitors, of course. You could have your 30-minute on one monitor, your 5-minute on another. And again, the 30 and the 5, those aren't magical numbers. They're common numbers. They're common time frames that a large variety of traders actually use. So right now we see price pulling back to the BBC. Price always reverts to the mean. In our case, the mean is that green line, which we call the BBC, which just stands for bull bear cross. Nothing complicated, nothing confusing, and not expensive when compared to much of what's available to a retail trader. Okay? So when price pulls back to the BBC, we expect it to hold. It holds more often than it doesn't. Now there's a difference between understanding what the next high probability move is. There's a difference between knowing that and being able to tell the future. The higher the time frame, the more reliable the signal. In other words, the probability of price holding on a pullback to the BBC on a 30-minute chart, there's a higher probability that it will hold on the 30 as opposed to the 5 or the 1 or any other smaller time frame. Okay? Now this is something that you can walk through historic charts and you can see for yourself if what I've said is true or not true. Even through this incredible week that we've just experienced, price continued to hold more often than it doesn't. Okay? pull back to the BBC on the 30-minute. Question, of course, is it going to hold? We had a bearish cross here. As we can see, price absolutely pulled away from the VBC. This first move, we pulled back and it held. We pulled back and it held. We've pulled back. Question, is it going to hold? Okay. Well, it just held twice, so this time it probably won't. That's not logical reasoning. How do we know if it's going to hold? Well, on this 5-minute, price will have to get above the BBC. Then it will have an opportunity to hold on the pullback. Okay? This is what we're experiencing here. This first close, now we got above, well, let's go back here. We got above the BBC here. The following candle, well, you can see what happened. We get a leg and a retracement. We get a leg and a retracement. This retracement did not hold at the BBC. Okay. The swing high of that candle was 24.39. Let me put that back up and make sure I pin it so that as I type over here, this remains on top. Okay. Based on a 5-minute chart, do we want to short this market? That's an appropriate question. I scrunch it up a little bit. There we go. Okay. We had a lag and a retracement and a lag and a retracement. Price did not hold. So this leg, this retracement, has now led me to this leg. Reasonable obstacles. First, we'll just do some very basic fib retracements from this low to this high. And the swing low put in. That's pretty close. Let's see if we can get a little closer. Come on. Okay. Low to the high. We're currently at a 50% Fibonacci retracement. Now, this swing low and this swing high should be the same on everyone's chart. Current price, 24.42 1/4. Okay. So if we hold at the 50% Fibonacci retracement. And it's worth noting as well that this swing high on remember we've got a leg, so we anticipate a retracement to the BBC, green line, bull bear cross. It's just a very simple name. I wanted something that spoke just by its name, what we would anticipate to happen. So we've had the leg, we've had the bearish cross in the 5-minute. Now we're looking for a retracement, which would give us a setup to take a short trade. And on the 5-minute, put a little box here. That's a potential area for price to seek out. So we've got that swing low, and then you've got that bullish cross. So from that low to the cross, that becomes important for the price, important area, etc. So here we still have the beginning of what could potentially be a continuation of this move that has a 50% intraday retracement. That in and of itself, lots of people watch a 5-minute chart. A 50% Fibonacci retracement is a spot where we would anticipate the market to hold, giving us a bounce up to the BBC, which then puts us in the driver's seat to take another swing low, or another short trade. We bounce, we then encounter the BBC, we use our smaller time frame. And can you use even smaller time frames? You can. The smaller time frame is not always the solution, is not always the answer. On the 1-minute, which again, a lot of traders watch a 1-minute chart. So if we hold this pullback at the BBC, then that will create an opportunity to continue trading from here down to here, down to here. Okay. Now let's see what we've got as far as weekly trading zones in this neighborhood. We have a weekly trading zone way down at 2268/69. So let's do that. Weekly trading zone. 23. Oh, overhead, we've got 2471 slash 72. So that's 2471. And 2472. So 2472. I'm not going to do this on every market because it would take too much time. However, I'm showing you how to do it so that if you're on the trial, you have access to the indicators. You have access to around-the-clock support via the private Telegram channel, which you will be given access to while you're on the trial. If you don't know how to take the trial, it's very simple. Go to Emini Trading School.com, Emini Trading School.com, and there you'll see the little sign-up form, just your name, your email address. You'll receive an email from Valerie that gives you the link not only to the live training room each morning. You'll receive the current password. You'll have access to all of the alerts, both the Concierge and the Logic 247. You'll have access to the discussion group. This is where all CFRN traders gather to compare notes, to be encouraged, to perhaps be encouraging. Okay, it's where you want to be. Okay, I'll go through some of the conversation last night from the Telegram channel. So we've set up. Now we have the little app that Michael created. The string of numbers you receive. I'll just show you what it looks like. Close this. 2472. Okay. All right. 2471 slash 2472. So we've spiked that. Okay. Price closed of the BBC. When that happens, we anticipate higher prices. As long as price remains above the BBC, we continue to anticipate higher prices, knowing that during the process, right? So here we get the first close below the BBC. Price pulled back to both that BBC and the WTZ, the weekly trading zone, which then gives us another leg to the downside. We get a leg, we get a retracement to the BBC, 2430. The market makes $4,000 per contract available. Again, getting out a swing high or swing low is very difficult because you don't know it is such a thing until after the fact. Okay. So we pull back to the BBC. It holds. Leg, a retracement. It holds. get a leg, and it holds for a minute. Just a little wick there. Touch the zone, back off, hit a run and start, and on this candle, we managed to make it through. Okay. Now again, last night, the alert went out, was posted. At 10:15, so that's 22:15 military time. Okay. So 2200. All right. So we've got all this consolidation at the weekly trading zone. Only three things can happen when price reaches a weekly trading zone. The most likely thing to happen is consolidation, which is this, and this, and all of this. Now, let's go back to this trigger right here, which happened it happened during the 5 a.m. 30-minute candle. Okay. And I do have this pinned. So when I click on this chart, okay, see when I click over here now, this holds. So at 5 a.m. Eastern. Let's scroll back to that. Let's find the right day. Let's go ahead and bump this up to a 5-minute for right now. Okay. And we'll shed these fibs for a moment. So again, we're looking for 22. Well, let's just go to 5 a.m. And we'll find it here in just a moment. There we go. 5 a.m. March 17th. So the 5 a.m. candle is right there. There. Okay. All right. So from the 5-minute point of view, we can see where we locked the limit up last night, and shortly after the London Open, two things happen. Sellers and buyers. Two things can cause markets to decline. One is that buyers stop buying, and that's probably the most important reason. And the other reason is you have a lot of heavy-handed selling. So we start the decline, or I'm sorry, the candle that actually triggered began. Now, the candle I'm on now, this is the 30-minute. Okay. So this move that turned into a $3,000 per contract move, very easy to see after the fact, right? Learning to understand what's happening as it happens. That's, if there's a key, well, that's it. Okay. All right. So price approaches 24.30. And the idea was to consider being short at 24.30. Okay. So this was your 5 a.m. Volume here is just exactly what it says. It's the amount of volume that traded during 5 minutes. Okay. If you hover over, it gives you pop-up 9,264 contracts during that just randomly picked 5-minute period. Of course, when you hover over on the 30 minutes, you're going to see whatever volume transpired during that 30-minute candle. Okay. All right. So the idea based on the Concierge Trade Alert, sell 24.30. Okay. 24.30 happened you know, 24.30. I don't really need that. And that's about as close to 24.30 as we'll get it. So that was a Concierge Trade Alert. $24.30. Alrighty. Any questions on anything that we've covered so far? I'm really trying to take it slow through this one. The others, I'll point out the numbers, I'll point out what happened. But because everything that we do from market to market is the same. We treat gold the same as we treat the S&P, the same as we would use it on pork bellies or you name it, okay? It's just the very most basic way that we found of looking at the markets, okay? When we say that, or I say that our markets are fluid, or our methodology is fluid across all markets, all time frames, that's exactly what we mean. And it's exactly what some folks say, well, that's not possible. You can't really do that because the markets have different personalities. And I don't disagree with that statement, that different markets have different personalities. I think that's entirely possible. I don't know that I fully understand it, but it's true. So once you understand the methodology and the strategy, and how to read the indicators, or how to understand what information they're trying to convey to you, that means your job is to simply show up, take a look at the markets, and see which market is presenting you with the highest probability, lowest risk opportunities, okay? Now, some people say, well, I just trade the S&P. I got no interest in trading anything else, just trade the S&P. That's okay. It's perfectly okay. However, what I recommend is that you have other markets that you look at. In other words, let's say the S&P and the pork belly, are both giving you a buying opportunity, a selling opportunity. You can obviously use your preferred market, your favorite market. Now, it's important that you understand why it's your favorite market. In many cases, it can be really simple. Some people, because however they discovered trading futures and got involved, they don't even really know about the other markets. So you're looking for the market that provides you with the type of opportunity that you understand. And on every market, you're going to have bullish crosses and bearish crosses, and then price is going to respond to the important price, to the important area, and in some cases, based upon that, it will establish a new area of support or a new area of resistance. I'm always pointing out the logical moves. What is the most logical, high probability move that the market should attempt next, or better yet, what is it attempting right now? What is the market doing right now? Not what I think it should do, or not what it could do, or supposed to be doing, is doing. That's what we're looking for. What the market is doing right now. Okay? So, this is 5 a.m. Eastern. This is 5 a.m. Eastern. Obviously, you see the conundrum straight away. We're printing a green candle in the 5-minute. But over here at 5 a.m., printing a red candle. Okay? Now, remember that the information conveyed to us by the chart, it's more significant the larger the time frame. Keep that in mind. In fact, it might even be worth writing down. We understand on our 30-minute chart that we have triggered 24:30, that's our signal to be short, and we're printing a red candle. Okay? Our conundrum is that this paints a picture for the market to go lower. This shows a market that's climbing. So now what? Well, let's scroll over a little bit. And the market will tell us now what? We get a bullish cross on the 5-minute at exactly 5:30. Okay, we've had a leg. We've had a retracement to the BBC. So even though, based on this 30-minute, the picture it's painting is for lower prices. What do we do here? Now, using just the 5-minute chart, ignoring the 30-minute, it couldn't be, well, it's just kind of a picture-perfect move in that we get, you know, a bullish cross, prices, here's bullish cross, you know, remember at one point in the life of this 5-minute candle, so we opened here, and we started printing a green candle. Then we ran into this little resistance area created on a 5-minute chart. 30-minute, that's where you want to take your marching orders from. Okay? So we get a bullish cross, prices pulled away, prices pulled back, the BBC held. It gave us a green candle, or as we call it, an up close. The open of this next candle is 24.39, and the next swing high is 24.81.5. 24.81.5, we could just round it, call it 24.80. So basically, what we have is we have a 10-minute move. 10 minutes, that's it. Where we go from 24.40 to 24.80. It's a 40-point move. Counter trend. Follow me? Got any questions, please put them in the chat box, okay? Because this applies to every market. The explanation applies to every time frame. Well, I can't use that information because I trade a 15-minute chart. That's okay. Pick a time frame. Stick with it. Actually, of course, we recommend a couple time frames and multiple time frames. That allows you to view the market from a couple of different perspectives. And that's a very powerful tool to have, to be able to do that. Doesn't make trading easy. Nothing does. But it can be simple. And what's important about learning the fundamental rules of the strategy, of the methodology, is that it is portable. By portable, I mean you take that knowledge, that understanding that you have, and you're free to go and apply it to any market, to any time frame. This process repeats itself again and again, over and over, day after day, month after month. Those of you who've been around since the beginning of CFRN back in 2005, April of 2005, you've watched this process happen again and again and again, because that's how markets work. Okay? So the 30 minutes says you got to find an opportunity to go short. Okay? Well, I've got blue and climbing. That's not conducive to a short trade. I need for this chart to play catch up with this chart. Okay? So we've triggered. Now, this little wick, think about this. This candle opened right at 2430. It opened at 2432 and a quarter, to be exact. Okay. Then it ran up to 2448 and a half. This was a green candle at one point. The beginning of the life of this 30-minute candle, it was bullish. Okay, we closed here, opened here, made that move higher to 48. Then the market reversed, and once price came back down through the opening price, and again the opening price of this candle, open 2432 and a quarter. As price moves through that area, this green candle becomes just like that, a wick, and you begin printing a red candle, which is in keeping with the alert to consider being short 2430. Okay. Bullish cross, pull back, move higher, pull back. Price always reverts to the mean. On 30-minute, on 5-minute, price always reverts to the mean. Okay. So now we're up to when we come after this move higher. Okay. Counter trend, move higher. Price gets back below the BBC. And that in and of itself, you've got red falling overhead. That creates fertile soil for the purpose of going short. We had, it looks like, based on this, we'll have to look, that just may have been defined as an area of support or resistance. Okay. Let me apply to this 30-minute chart. Let's just go with 24, 30. Okay. That was the trigger, to be short. Okay. So, as price drops below the trigger, does what we expect it to do, it's lower prices, and then we pull back. Now, here, on this trigger coming down, we've got red and falling overhead. We also have red down here on the slingshot. Okay. Once price completes that initial move, we pull back to the trigger and the BBC. We get a move. This is called consolidation. Different people have different terms for it. But an important price, an important area, once price gets there, sometimes it can become comfortable. Just kind of takes a breather, takes a break, just kind of wants to hang out a little bit. It gets interesting at this point where, okay, we're back and forth, all right? We're above the trigger, below the trigger, above the trigger, below the trigger. But right here, the CFMA1 goes from blue and climbing to red and falling. When this candle opened right here, buyers came in mass, and they drove, you know, you got it in your mind's eye, you got to see this. This was a big green candle. You know, something along the lines of this right here, except bigger. She got this big green candle. Looks like we're going to the moon. But by the time this 5-minute candle finishes, so all of this happened in 5 minutes. It happened at 8:30 a.m. Eastern. There may have been some accompanying economic report at that time. We can check and see, but big green candle, all the world, you know, forget about our methodology or our strategy, just from a world view, you know, this huge green candle certainly seems to say that, okay, I'm heading, or I'm attempting to head to the zone overhead, wherever that may be, and I certainly have a potential obstacle in this area right here. So, big green bull candle. Looks like it'll be no worries, no trouble to get to this next rung on the ladder as price attempts to recover. Okay? But what happens? Sellers come in, buyers stop buying, take your pick. We end up with this very bearish wick sticking up above the consolidation, above the trigger to be short at 24.30, and price drops to a swing low of 23.52. Alexa, 2430 minus 2352.
2,430 minus 2,352 is 78.
Alexa, 78 times 50.
78 times 50 is 3,900.
Okay. Okay, we've already highlighted that over here. I call it a $3,000 per contract move. I guess it's more like 3,900. Okay. Now, getting out here is pretty tough because you don't know the significance of that number, except in hindsight. In hindsight, with a historic chart, anybody can look like a genius, right? But I'm just being upfront and honest with you. I don't have the ability to get out of swing highs or swing lows. I don't even look for them anymore. I don't attempt to base my trading around my ability, to catch a bottom or to catch a high. What we want, what Michael and I attempt to teach, is forget the swing high, forget the swing low, wait for a move to happen. Let a move happen. Let it come, let it go. Price always reverts to the mean. And in our case, the mean is the BBC. Okay. So no matter how powerful the move to the upside or how powerful it is to the downside, we know at some point price is going to come back and touch the BBC. Now, I'm not very good at drawing on anything, with anything, much less a mouse. I think I have some kind of little drawing tools here with Go-To. Let me see if I can pull up one of those writing instruments. Pen colors. That's interesting. It says pen colors for those who can draw. Okay. So they let you know right up front that this is going to be a challenge. All right. So I've got a pen and I can choose my color. Hey. All right. Let's go with, decisions. I will just go with blue. All right. Price makes a move, right? Price always reverts to the mean. In our case, the mean is the BBC. So let's say we got the BBC doing something like that. Okay, I should make those different colors, eh? Probably can't do that on the fly. Nope. All right, that's okay. So we made a move. Here's the green line, the BBC. Okay. Price retraces to the BBC. And we all hold our breath. Is it going to hold? Is it not going to hold? I don't know. Do you? Now, what I'm looking for now, I guess I got to come out of pen mode. Pen mode. Okay, normal non-drawing mode. Okay. That's what I call a window of opportunity. Okay. The initial impulse leg tells me that price wants to do business, right? There's a move afoot. Price pulls back to the area that we expect to be good support. Now, I'll even throw in another dynamic. It's possible that you also have a WTZ, weekly trading zone, right there. All right. So, any market, any time frame, we get a leg, we get a retracement to the BBC, and maybe there's even a WTZ in the mix, like you see right up here. Okay. So, we're not interested in trading this move. We're not interested in trading that move. The move that we're interested in trading see, pen, choose pen color. What we're interested in, what our methodology and strategy embraces, is this move. Okay. Now, we understand that we have support here. We have resistance here. In fact, let's see if I can. Okay, I gotta take the pen off. Leg, retracement, a leg. Now, we have, I'm trying to turn the pen off. There we go. Okay. So, we understand that this swing high may be an obstacle. Why? Because it was before. This swing high represents a scenario where there are not enough buyers compared to sellers to take price any higher. Everyone agree? Okay. Now, on this retracement, back to these areas where we anticipate support based on everything I said. At this point right here, order flow, which is buyers and sellers actively in the marketplace, order flow would not permit a move any higher than this. The retracement did not allow for a move lower than this. And any other reason that anybody gives you other than the order flow, other than the buyers and the sellers who are actively putting on and taking off trades, if anyone gives you any other reason, it's just false. I'm not calling anybody a liar. I'm just stating a fact about the market. Okay? So, we would all love to be in this move, but you can't see it really until after the fact. Okay? This move here, counter trend. Are counter trend trades legitimate trades? Of course. Some people specialize in trading counter trend. Okay? They look for these opportunities where price has made a definitive move in one direction or the other. they understand price reverts to the mean. Their mean may be something entirely different, but they anticipate the pullback, and so their focus is here. This is their sweet spot or window of opportunity. Max Lucado wrote a book called Finding Your Sweet Spot. I might have it right here on my bookshelf. Max Lucado. I don't see it offhand. It wasn't his greatest book, but it was a good book. All of Max's work, I think, is very good. And finding the sweet spot in life is finding that spot where you know you were just meant to be. You're doing what you know you were meant to do. I mean, it's just that. Now, the term sweet spot, I think, originated with baseball. A bat. I don't know about these aluminum bats, but probably. But the wood bat, there was supposedly a sweet spot that when you swung, if you could connect your bat and the ball at the sweet spot in that bat, you were about to send that ball over the fences. Okay? Sweet spot. So for a counter trend trader, this area is the sweet spot. For us, our sweet spot is not the original impulse move. It's not the retracement back to support. But it is, in fact, the move between this point and this point. Now, does price always stop here? No. In this little crude drawing that I just did, we can see that price theoretically sailed through that obstacle. Okay. Over time, you'll learn how to use a trailing stop to take advantage of the continuation of the move, if you so choose. Okay. You don't have to. If this represents your goal for the day, your 2 points, whatever that might be, then you're done. Okay? So, I used to use the term sweet spot. I've used the term window of opportunity off and on for years. I've been leaning a little more heavily on the term window of opportunity of late because I've had a number of people, Tim first mentioned it in the Telegram channel, but then I've had other people, contact me, message me, and tell me that that concept, that idea of looking for that window of opportunity has greatly impacted their trading and their ability to be more consistent. So, do we have any of these so-called windows of opportunity on this chart that we're looking at right now? Yes. Okay. So, I drew this in the bullish direction, right? But it applies either way. Here's our impulse move. Okay. That would be the opposite of that. It's just heading down. Okay. And I'll find a bullish one and show you that as well. Okay. So we have an impulse move. Price retraces to the BVC, just like it did right here. Okay. Price can go no higher. When price can go no higher, it may spin its wheels for a bit, but eventually it's going to do an about face and it's going to go look for support. Price trades from support to resistance, back to support, back to resistance, back to support, back to resistance. I went into this in great detail on yesterday's show. So if you missed yesterday's show, you can go watch that. and hopefully if you have any questions, it'll fill in the blanks. So, impulse move, retracement, market starts to decline. So if I'm looking for a sweet spot, well, this is the window that I put up last night. Okay, now when I put this window here, obviously we were on this candle. Well, I won't say obviously, but I'll just tell you, it was on this candle that I put this window of opportunity. Why? Okay. Well, the why is because if I look left, I've got nothing but a big green candle here. Okay. Now, buyers came in right here, drove price here. No hiccups, no nothing. It just did. Okay. So on the decline, what I'm looking for is an opportunity, a window if you will, which becomes my sweet spot. And that would be from where I put the top of the box really to the low of this candle. Okay. Just as price just sort of glided up, what I was looking for was it to simply glide down. Okay. I expected the market to run into support here, and if it made it through there, then here. Okay. Now, what's this line about? Well, let's shrink it up a little bit. Right there. Okay. There's always a reason, and you can take the time to go chase it down and figure out what the reason is or was. Or not. It's not going to impact the next trade. But you should be aware of these areas. Okay. So, did price find support there? Well, if we look inside of this 30-minute candle, I have no doubt that it potentially bounced some. Did it ultimately overshoot it? It did. Okay. But it's a spot you want to be aware of if you're in this short move as you approach this previous area of important support, major support. Okay. After the fact, just looking at a historic chart, it would seem that we just cruised right through it. And we may have, again, you would have to break it down to a smaller time frame. Well, let's do that. 5-minute chart. Here's the 5 minutes. And the time frame that we're talking about would be this candle right here. So that was a 15:30 candle on the 16th. Okay, so 15:30 on the 16th. Okay, so here's 15:30 on the 5-minute right there. $15:30 on the 5-minute, March 16th. 15:30. This is a 30-minute candle versus a 5-minute candle. Do you see how price behaved? This candle lasted from 1530 to 1600. So there's 1530. There's 1555. Okay? So we have a red 30-minute candle, but we had an up move. Let's not get ahead of ourselves. So I want to know if there's anyone in the audience who does not understand the concept of the window of opportunity or the sweet spot. Okay, right now, sweet spot developing on the S&P. We're printing a big green candle. Okay, we got an alert overhead. That number's wrong. It should say S&P. It should be just 2515 or 2515. 2515. Okay. All right. So, sweet spot. Well, I would say we're in a sweet spot right now. Over here, you see that little bit of wick, all right? When this candle, all right, let's talk about how this candle developed. It opened here, right? I'm sorry. It opened here. We dropped, but the swing low of this candle, right, is 2508 and a quarter. So we put in a low, 2508 and a quarter, but then we bounced. Buyers came in, drove it up. When this candle opened, there was a continuation of this bullish movement, evidenced by that little bit of wick. When this candle opened, buyers tried to take it up, but they got slapped down, as it's called, right? Just knocked you right back down. So right here, got buyers trying to take it higher, and they are told no with an exclamation point. Okay. So if price gets back to this area again, I have every good reason to think the same thing is going to happen. The market repeats itself over and over on every level, from every perspective, in every time frame, which leads us back to important prices, important areas are almost always tested. Okay, so we're approaching last night's trigger. Remember, this was a big green candle at one point. The big green candle led to a very bearish signal, if you understand how to speak candlestick. And I'll show you real quick. You don't have to spend a lot of money or a lot of time. There's a couple hundred Japanese candlestick signals. This comes from the Japanese rice traders back, I don't know, 400 years ago or so. They put this together. The Secret Life of Candles. If you search that, it will take you, oh, that's interesting, that little drawing I did. Anyway, Doesn't take much to amuse me. Secret Life of Candles from CFRN. Okay, you just click on that. You can print these out if you want. Maybe put them in a little binder. Now, Steve, I'm trying to think of his last name. I met him shortly after, or met him, we developed a friendship shortly after CFRN began. He sent me one of his books, which is about $50. He sent me an autographed copy free. I read it till the pages fell out. That's a true story. And based on what I learned from him, even though there's 200 different identified candlestick patterns or signals, some of them you might see once or twice in your lifetime. There's about 10 of them that you'll see on a fairly regular basis. Okay? So it's real basic. It walks you through first, what a candlestick is, what does it represent, what is it trying to tell you. Okay? And you can just walk your way through the slides. Talks about the different types of dojis that you'll encounter. There's the bullish engulfing with an example. Bearish. Okay. All right. So you get the idea. If you want to learn more about what each candle or group of candles is trying to communicate to you, this is a good place to start. Okay, just Google The Secret Life of Candles. All right. So back over here. This is a very bearish. We had a huge green candle. Why did it stop there? We need to look no further than our old friend, support and resistance. It is alive and well. Big green candle turns into a bearish candlestick signal. So now price is going to go look for support. It trades through this weekly trading zone, but it finds support at the BBC, which then sends price back up in search of resistance. Okay, so we got a swing high at 25.19 and a quarter. So while it doesn't look like much because we're in the land of giants, that's a 4 1/4 point move right there so far. Now price has pulled back. Important prices, important areas, almost always tested. Okay, so now, do we have a sweet spot developing? Anything going on here? I think we already identified that. I'll show it to you again. Okay. Now, did we make it all the way to the top of the window? No, we did not. But that's okay. And I didn't even put this up until after the move was underway, which I was quick to clarify with you. But for me, see how there's no interference. Now, we know that inside this, well, this is actually just a 5-minute candle. So a lot happens inside of a 30-minute candle, and relative, something happens inside of a 5-minute candle. We could take this to a 1 minute. Michael was saying he used the 1 minute this morning in the live training room. So here's the window on a 1 minute chart. Now, on the 1 minute chart, you have this bearish cross. You know that I believe that where the bullish cross and the bearish cross happen on a 30-minute chart conveys a lot of information about where the market may next find support and resistance. That some would call that hidden support and resistance because it's not something that every trader is going to see. All right. So the window of opportunity, the sweet spot, looks very much different on a 1-minute chart. Okay. If price holds right here, this time we got there ahead of price. Okay. So basically, actually, you want to be above those highs. We are. So basically, we're talking 25.08. You know, maybe up to 25.15 to be conservative. If price truly does trade between support and resistance, back to support, back to resistance, and I assure you it does, but I also encourage you to walk through, you know, enough historical charts that you believe it, not just because some guy on the internet said it, but because you've done the legwork. You've put in the time. You've made an investment, not of money, but of time. Because you have to have market truths to hang your hat on. And they don't have to be the same as my market truths. You know, my market truths are, you know, probably one of the biggest. It's important prices, important areas are almost always tested. On a pullback to the BBC 30-minute, it holds more often than it doesn't. Okay? Those are things that I believe, not just with my head or because I heard some guy say it at a seminar, or I read it in a trading book. I believe it because I know it's true. How do we get to that point? How do we reach a point where we know something is true? Well, there's only one way, and that's experience. Putting in the time. Walking the charts. Talking to the charts. Letting the chart talk to you. Now, we were discussing prayer, I think, the other day in the Telegram discussion group. And I said that I've learned over time that when I pray, and most of us, I think, for the most part, our definition of prayer is, you know, whether we get on our knees or not, that part's not important, but it's a conversation with God, right? So what is a conversation? Well, it's when two people or more talk to one another. So most of us, when it's prayer time, and some of us have, you know, predetermined prayer times. I'm not saying we face east and do anything, but you know what I mean. Oh, every day at maybe X time we set aside, you know, for prayer. Okay, there's nothing wrong with that, of course. You can talk to God anytime; He's always home. But what I found, now they say the way to be a great conversationalist, right, is to be a good listener. Have you heard that? And you probably know people in your life that you'd love to have a conversation with them, but they just won't shut up. Right? Just shut up. All right, you see what happened here with this window of opportunity? Now, why did I put the top of the window below that swing high? Well, because I have to anticipate, or at least accept on some level, that because price was unable to get through that area before, it might struggle this time. This time it didn't. Does that make me wrong or bad? Or do I have to go back to the drawing board? Do I need new indicators? No, it doesn't mean any of that. Okay. In fact, we know that because we're above the BBC, we know that we should anticipate higher prices. So what just happened is that in keeping with higher prices, it is. Now, if I shrink this up a little bit, we can see that price can get to 25.40, which, as you can see it on the 30-minute, this is the high of that spike right there. Okay? So, as we open this up so you can see it again, there we go. Okay. So, on the 1 minute, well, just 5 minute, what happened? We put in that swing high, which represents this rectangle here on the 1 minute chart. Okay. Price pulled back to the BBC where it held on the 30 minute. It held because it holds more often than it doesn't. We appear to be in an uptrend. If the uptrend is going to continue, then we have to put in a higher price than this swing high. That's just the continuation of the trend. Okay? A trend is defined, an uptrend is defined by higher highs and higher lows. The reverse, of course, true for a downtrend. Okay? So, now where's our window of opportunity? Which translates over here to that. Okay? As I look left, you see that swing high. Okay? Picture this. Green candle, green candle, green candle, red candle. But what happened? Okay, this candle closed here on 30 minute. It opened here. So for a minute or two in the life of this 30-minute candle, it was green, pushing up against the BBC. Then it rolled over. So does that make that an area of potentially good resistance? Right there where that wick is. Yes. That's why my window is above that. Okay? And you'll notice that my support, or my resistance line, is just below that swing high. And the top of the window here is below that swing high. Always trying to be very conservative. Okay? So the bottom of the window, 25, 26 we'll call it, or 25, 25, yeah, 25, 26. Top of the window, 25, 35. So what is that, about a 9-point window of opportunity. Okay, so bring back up that 1 minute chart. None of these time frames are magical in any kind of way. The only magic in any time frame is the magic that you bring to it That magic being the amount of time that you have invested in watching that time frame compared to this time frame, and you're now able to grab your mouse and dance to the rhythm of the market. Okay, we're entering the window. Potential 9-point move. Any questions? Don't forget, the average range of a 30-minute candle right now, based on the whichever look back period we put it on, is 32 points. Under normal conditions, the average daily range, the S&P 500 E-mini Futures, going back many years, is 20 points. Okay. So we've entered the window. Apparently I didn't match these windows up exactly, but it's just so that you get the idea. Okay. It's important to me that when I say a window of opportunity, you understand what it is I'm talking about. So over here, we have put the bottom of the window at 25.26. Over here, I guess we need to adjust it to compensate, because the 30-minute is always where we want to take our marching orders from. Okay. Let the 30-minute define the playing field, or the next course of action. All right, so I'm just trying to match these up. All right, so 25.26, 25.26. All right, I just want to leave that one where it was. 26 and a half, I guess. Swing high so far is 25.33. So from 26 to 33, about a 7-point move. Okay. Now, when we enter a trade, we simply want the market to do one thing. If we enter long, we just want it to fly to the target. If we enter short, we just want it to fly to the target. Something in our brain leads us to believe that when we enter a trade, long or short, that's the beginning of the next trend. because we entered the market. I mean, we're perfectly content to watch price channel back and forth all day long until we enter the trade, and then we don't want it channeling anymore. No. This time it's supposed to be different. Okay. Did we have sellers come in early here? Perhaps. Okay. Remember, this is a 1-minute chart. We pulled back to the BBC. We pulled back to the BBC here. We pulled back to the BBC here and here. Did we overshoot? Did we overshoot? Yeah. Very volatile market conditions. So, here comes the cavalry bouncing off of that 1-minute BBC. Right now, we have blue and climbing overhead. On the 30-minute, we've got blue and climbing below us. Two different dynamics, okay? So here's price approaching the bottom of the window again. And that window and this 1-minute window and this 30-minute window are based off the same thing. Obviously, they look different because of the scaling of the charts and the difference of the time frame. So, I'm going to leave it at that. If you have any questions, you know how to reach me. If you need help, call 949-42-EMINI. Speak with Valerie. You can always send her an email, support@cfrn.net. If you're on a trial, you can book a one-on-one mentoring session at no charge. Of course, if you're already a member, you have unlimited access to one-on-one mentoring. You simply go to the website to book a session with me, or call Valerie and she'll be happy to set it up for you. If you want to have a mentoring session with Michael, you can email him directly, tech, T-E-C-H, at CFRN.net. Okay, and to just get started on a trial, if you've never taken one, you get one trial every 6 months, 2 trials lifetime, okay? The reason we limit that is because we're doing what other folks don't do. That's during your trial, we're giving you unfettered access to everything that we do. We teach you the strategy. You have access, get to use our indicators. You get the alerts, both the Concierge Trade Alerts and the Logic 247 alerts. You have access to the discussion group in the channel, and that's really where so much of the information is conveyed. Training, it's kind of just, it's a complete package, okay? On your 1 minute, we're running into red and falling, okay? Is that anything to be alarmed about? On a 1 minute, not so much. You know, on a 30 minute, remember, the bigger the time frame, the more important the information. When you drill down to a 1 minute, you start to get a little bit of static, a little bit of noise. The larger the time frame, the less static, the less noise. Okay? This is the 30 minute, still appears that it wants to go up and close that window of opportunity. It does. Okay? Well, 1 minute is simply highlighting the obstacles that price will have to overcome in order to do that. It would have to overcome that swing high and red and falling. And then if it gets back into the window, top of the window was 25.35. So we already determined it was a 9-point potential move, and the high was 33.75. So what did it move? Went from 26 to 33. So yeah, it moved about 7 points so far. Okay. And after this pullback to the BBC, it bounced us support, took us to resistance, which is taking us back to support. Let's see what it looks like on the 5 minute. Okay. Same chart, same prices. You're just viewing it from a different perspective. Okay. If you were long this particular move, your stop loss could simply be the low of the current candle. Now, there's something to think about. If you put your stop loss there, good chance you will get stopped out. Okay. Doesn't mean this move to the upside is over. Price very well could pull back to the weekly trading zone, and the BBC, by the time price gets there, they'll all meet up potentially right here. Right here. Whoa, right here. Which would then lead to another leg to the upside. However, notice we have a swing high right here we have a lower high right here, and we have yet another lower high right there. So we got a high, a lower high, and then another lower high. Okay. Now, this window of opportunity did not completely fill. Instead of 9 points, it looks like it went 7. So, do we have to go back to the drawing board? Do we have to start over? Do we need new indicators, a new methodology, a new something? Perhaps we just need a new way of looking at the markets. And by a new way of looking at the markets, I don't mean jumping around, changing everything from 1 minute to the next, from one day to the next. Oh, well, I tried this yesterday and it kind of worked, and this is a variation of that. So let me try. Just at some point, you got to just say, enough. Stop. Be still. And know that the market's driving the bus, and your job, if you decide to make it your job, is to discern whatever the heck price is trying to do right now. Okay? When price pulled up to the BBC and couldn't move any higher, it led to a move to the downside. When price got back above the BBC, typically it would mean a move to the upside, right? But we stalled and we went sideways. That's called consolidation. When price reaches a weekly trading zone, the most likely thing to happen is consolidation. Second most likely thing is rejection. The third and least likely thing to happen is the slice. Okay? All right. So here we have price pulling back, attempting to pull back on the 30-minute to the BBC, to the weekly trading zone. High, lower high, and yet a lower high. So if these three meet up in this area, our narrative says that we'll get a bounce to the upside. However, we'll be very much aware that we had a high, a lower high, and yet another lower high. Doesn't mean they can't be taken out in one 30-minute candle. They certainly could be. Even a 5 or a 1 under current market conditions. Your job, should you accept, remember that Mission Impossible? The little tape recorder burns up. So if this unfolds as we just discussed, okay, in your mind's eye, picture this red candle continuing down. In fact, there's still 11 minutes left in the life of the candle, so that there's certainly time for it to happen. So in your mind's eye, you see this red candle coming down, doing the meetup, and then you start building a green candle. Okay? Now, there's two things you can do. As soon as you start seeing that green candle build, you can get long. Oh, but don't have to wait for this or wait for that, or you can wait for anything. Okay? What we teach you in the live training room, that is the core methodology. It's the hardcore methodology. The rules are clearly defined in the live training room. You don't ever have to wonder, what am I supposed to do next? There's a rule for everything. Okay? Now, so in other words, you don't have to make any decisions. The decisions have already been made. We've already encountered every potential possibility or series of events that can happen when you're trading one of these markets on the 4-tick range chart. Been there, done that, got the t-shirt, okay? So, in the room, as you learn the hardcore methodology, okay, you simply have to train yourself to follow the rules. The thinking's already been done, the decision's already been made. You just have to show up and do it. That's really the definition of rules-based trading, okay? And it's perfectly fine to do that for the rest of your life. You never have to enter the realm of thinking and decision making and all of the other things that come along with being a discretionary trader. And one's not right and the other wrong. It's a matter of preference. You get to choose. Do I want to stick to strictly the rules-based methodology? Which, by the way, I think that you should for a period of time. Especially in the beginning. If you become a CFRN member, passport holder, the 2420 blueprint, which is another thing that you receive when you become a member, this blueprint really charts your course for you, okay? Now, the first thing we want you to do, using our strategy, using our indicators, is we want you to put together 10 consecutive days in a row. 10 consecutive days in a row where you reach your goal in 10 trades or less. Once you accomplish that, once you legitimately, honestly, no winky wink, put together 10 consecutive days in a row in SEM where you reach your goal in 10 trades or less, the blueprint will give you the green light to go live with one contract. Once you go live with one contract, the goal then becomes to increase your account balance by $2,000. Now, if you're trading the S&P 500 or any of the indices, normal margins are $500 per contract intraday. That's under normal. I think we have greatly increased margins at the moment. So that's 4 times. If you increase your account balance by $2,000, that's 4 times what it would cost you in real dollars to add a second contract. So why so much? To build a cushion, okay? Whatever you opened your account with, be it $3,000, $5,000, whatever the case, by taking that one contract and increasing your account balance by $2,000, you're, number one, underwriting that second contract, or you're paying for that second contract with profit you earned in the market. Guess what? You're a trader. When you reach that important milestone, from SEM to one contract live, to increasing your account balance by $2,000, and then adding a second contract with profit you earn in the market, that's a huge milestone as a trader. Then the blueprint will put you on a calendar-based schedule. You'll know when it's time to add number 3 and add number 4. And if you choose to build your account up to where you're trading 20 contracts, and when I say, you got to earn the right to trade this many contracts, that's exactly what I mean and exactly how you do it. You trade one contract until you've earned the right to add a second. And you trade 2 contracts till, based on the calendar, you've reached the point where you add another contract. Okay? Some people get comfortable at 5, just to pull a number out of the air, right? If one contract and 2 points a day makes you $100, then the same 2 points and 5 contracts, well, it's going to make you, well, 2 points and 5 contracts will make you $500 a day. 10 contracts and the same 2 points will make you $1,000 a day. However, none of that works unless you take it step by step. Putting the cart in front of the horse, it's always awkward for you and the horse. Okay? Stay in sim till you're consistently profitable. Our brain seems to have a short in it somewhere, a short wire, where if we struggle to be consistently profitable in sim, then going live, well, that should fix it, right? Because then we'll set up, we'll pay attention, we won't mess around. I mean, let's face it, we can't afford to lose any money, so we'll have to be profitable. That's faulty thinking. Stinking thinking, they call it. It will destroy you. You have to resist it. And just because you're having these thoughts and feeling this way does not make you a bad person. It just makes you a human person. If you stick to the blueprint, I'm not going to say you'll never blow up another account. Because if you break the rules as outlined in the blueprint, you will blow up another account. And another, and another, and another. It's only when you make a conscious decision that says, I'm done blowing up accounts. I'm just not going to do that anymore. The blueprint, if you have 2 consecutive days in a row where you do not reach your goal in 10 trades or less, the blueprint is going to tell you to go back to sim, book a mentoring session, get some help. That's what being part of a group such as ours is all about, is that you don't have to go it alone. You're not dependent upon somebody whose only goal is to pick your pockets for every penny that they can get out of you. We got one product, we got one price, and that's it. We don't have a million upsells. We don't have any upsells. The only upsell we have is if you're a partner from the old days and you want to be a passport holder, which means you also get the alerts, then we make it very cost effective for you to just simply upgrade your membership. But other than that, we don't, there's no new slick indicator of the week, or wow, we discovered something new, this is groundbreaking, earth-shattering, oh my God, your life's going to change forever. We don't do that, because it's wrong. And if somebody's doing it to you, you should make them stop. Okay? We open our doors to all people, 5 days, use the indicator, learn the strategy, actually put it to work in sim. This way, at the end of the 5 days, you can make an intelligent and well-informed decision if what we do really is different. Because everybody says that, well, what we offer is different from what the other people offer. Our stuff works. Okay? Now, let's talk about that for just a second, and then we'll wrap this up. A popular question. Do E-mini indicators really work? Well, That depends upon your definition of work. Let's say you have an indicator that you use on Monday and you have a profitable trading day. And then on Tuesday, you use the same indicator and you have a profitable day. Here comes Wednesday. Lo and behold, you don't change a thing, which is good. You use that indicator on Wednesday and by golly, you have another profitable day. Then comes Thursday. Same market, same body wash, same cologne. And it doesn't work. And Friday, you even step up the cologne a little bit. Maybe even burn a little incense. Maybe even burn some sage. Get them bad spirits out of here. Goodness. So at the end of the week, man, you're perplexed. It, whatever it is, worked on Monday like a champ. Tuesday, it worked like a champ. By Wednesday, you were convinced you were the champ. And then on Thursday, you felt like a chump. And by Friday, you're having very dark thoughts. Let me explain about the secret life of indicators. Okay, we already talked about the secret life of candles, about the secret life of indicators. If you buy an indicator, or maybe you're very creative and you're tech savvy and you either buy it or you create your own indicator based on whatever it is you want to base it on. When you compile that code, and if you're not a tech savvy person, that may not even make sense, but compiling code means that you write code that's going to instruct your computer to do something, right? So you run a test, or you compile the code to make sure that there's no errors. So if you buy an indicator, you can go in and grab that code if they make the code available. You can run it through a compiler and it'll say no errors. Or if you write it yourself, the final step of writing your own indicator is that you compile it, and if it comes back with no errors, that means the indicator works. So here's where it gets confusing for some people, for most people, I suppose. Okay. Now, we've already compiled the code. We know that it returns no errors. Therefore, the indicator works. So then explain to me why I was profitable Monday, I was profitable Tuesday, I was profitable Wednesday, and then suddenly, Thursday and Friday, it didn't work. Well, the truth of the matter is, unless you changed some line of code in that indicator, it worked on Thursday and on Friday. And you go, no. I got the P&L to show you it did not work Thursday and it did not work Friday. But it did. It absolutely did. When you write code, every indicator has some code behind it. Even the most simplest of indicators. There has to be some instructions. It has to be told what to do. Okay? Now, again, as long as you don't change any lines of code in the indicator, it worked the same on Thursday as it did on Monday. Monday may have represented profitable trades, and Thursday may have turned into horribly unprofitable, but that doesn't change the nature of the indicator and that it worked. It did on Thursday as it was instructed to do when it was originally created. It does the same job on Thursday that it did on Monday. You see, indicators don't create profitable trades. They don't create unprofitable trades. An indicator simply does whatever it is the person who wrote it told it to do. From the most basic of indicators to the most complicated of indicators. The indicator has no choice in the matter. When you apply it to a chart, it simply must do whatever it's been told to do. It has no option. There is no other option. It can't do what it hasn't been told to do. So if you are bouncing back and forth between indicators to this and to the oscillator, whatever, okay, and if your complaint or if your bump in the road is that your indicator stopped working, no, it didn't. Everything works some of the time. Nothing works all of the time, except the market itself. Market itself always works. And it's always right. When price pulls back to the BBC on the 30-minute, it holds more often than it doesn't. When it doesn't hold, that doesn't mean it didn't work. Not at all. It did exactly what it was told. This green line did what it was instructed to do, and then plotted the results, period. Okay? If it holds here, people will say, it worked. Just like here, it worked. Here, it worked. Man, if I could just figure out why it didn't work here, man, I'd own the world. But it did work. It worked the same here. It worked the same there as it did there, as it's currently doing there, as it did there. Now, it's an insidious place to be, where your life is controlled by whether your magic trick is going to fool the audience today, or is today that someone's going to see through the illusion. Tell everybody, next thing you know, it's in the newspaper. Houdini unmasked. Houdini off the chain. Oh, I like that. Okay. I hope I've given you something to think about. It worked. Now, there's people out there that's going to say right here, oh, didn't work that time. Yes, it did. It did what it was told to do and what it has done every day since day one. When price pulls back to the BBC, look at this little drawing down here, right? Okay. And remember this little curved line, that's our BBC. Okay. So we have an initial impulse leg. We retrace to the BBC. It holds, and it gives us another leg. Okay. Well, it's easy to see how that worked, right? But what if what if, instead of turning back up at the BBC, what if it had just traded on through? Does that mean it didn't work? Worked just fine. It simply is telling us, see, like right here on this one, okay? When price closed below the BBC, it didn't fail to work. It led us to this retracement, which will lead us to the next move to the downside. You with me? Same thing. So now, if you're not a CFRN partner or passport holder, I want you to take a second look at your indicators, whatever they might be. And I want you to look at them in a different light. Now, of course, do we think our indicators are the best? Well, we certainly know that they're the best for us because they give us the clearest, most unfettered view of the market that I'm aware of. Okay? Complicated and expensive does not equal better. The ability to understand and utilize defines better. So what's going to happen here? Has price held so far? Is it catching quite a bounce? It is. Is that what we would expect? It is. There's 17 minutes left in this 30-minute candle. Where's a window of opportunity? Turn my pen off. Pen. Normal non-drawing mode. Okay. So, price is bouncing off the BBC. Bottom of the window, 24.99. Top of the window, 25.12. So that's about a 10-point window of opportunity. Now, if, and again, we've got 16 minutes left in this candle. Let's say price closes at the weekly trading zone and the BBC. I mean, it's already been there. Let's just to say it closes there. You've got this 130-minute candle. Okay. Would that create in my mind's eye a window of opportunity right here? It would. And if this window is satisfied, that leads me to this window. Eventually, we'll run out of windows and we'll have to step back and take a larger, bigger picture look at the market. I mean, we can even go to a daily chart. Okay. We're off the high of the day. Does everything up to today's high look like a window of opportunity to me? Yes, based on we're above the 30-minute BBC. Trading's not easy, but it can be simple. If you're new to these parts, you've heard terms today WTZ, BBC, sound like a bunch of hooey. You got to call everything something, right? And so we try to use terminology that clicks, like weekly trading zone, WTZ, BBC, bull, bear, cross. Prices above, we're bullish, we look for higher prices. No matter what time frame we're looking at, we get below it, we're looking for lower prices. You know, that's worked out pretty well, since the inception of the markets. So anyway, and certainly since we've been using them. All of our past results are available. Just get a hold of Valerie, 949-42-EMINI, or support@cfrn.net. She'll be happy to share with you whatever it is you have an interest in. Okay? She'll help you go on with your trials. She'll help you get into the discussion group. Oh yeah, I did want to take a walk through the discussion group from last night. Some guy came in the middle of the night, tried to spam us, and Elon promotion. I had to shut him down. I need to ban him, I guess. I'll figure out how to do that later. See, I was very polite. Elon joined the group. Welcome, Elon. If you have any questions, post them here. And then he posted some spam thing that he was promoting, and so I had to kick him to the curb. All right. So let's scroll up. And of course I did it with Christian Love. Okay, what do we got? I guess I need to get rid of these little, remove all pen drawings, erase all drawings. There we go. Okay. Oh yeah, I definitely want to cover this. Oh, this was good. And I like to share this kind of thing. Almost there. All right, we'll start here. From one of our members. Teacher, can you go over these windows of opportunity? It's not new, Amon. It's simply a different way of explaining what I see and what I'm looking for. I've heard from many that this attempt to explain myself, I don't know if you guys remember Ricky and Lucy, but has been beneficial. And so we will be covering it in detail on Thursday night in the Partners Workshop. But I'm happy to answer any and all questions right here in the, when you're on the trial, you get to talk to us, to other partners, to get a real understanding of what we do and how simple it can be. Our mind always is going to try to complicate it, so you have to rein that in. Amon says it's a great idea to put the windows there so we don't get stuck in the mindset of having to marry a trade in either direction. Thank you for doing this. My response, I'm glad it's helping. When the clouds part, it's a wonderful day and an important milestone on your journey to becoming a trader. So this was all leading up to, I think, the Globex Open. No, this was at 4:30 yesterday afternoon. Oh, I know what this was. It's when the market reopened. Hold for me 1 second. I'm back. Mike says, here's a question. What did you say sets up the next leg to the downside? Clarify that for me just a little bit, Mike. I'll be happy to answer it. Okay, so this is when the market was getting ready to reopen for the final 30 minutes of trade. It's important to remember that futures, the stock market stops at 4 p.m. Eastern. Futures keep going to 4:15. Then futures close. Then futures reopen at 4:30 and trade until 5 p.m. Eastern. That ends the official session for futures. And then futures reopen at 6 p.m. Eastern, 1 hour later. So the Monday session ended yesterday, as it does every day, at 5 p.m. Eastern. Stocks close at 4 p.m. Eastern. Futures close at 5 p.m. Eastern. Stocks don't open until the next morning. Futures reopen an hour later at 6 p.m. Eastern. So we had a small gap lower on the open. Okay. We traded 4,000 contracts in 2 minutes on the ES. I was pointing out that yesterday the Monday session would end in 27 minutes. We're now 3 minutes into that final, and that final 30 minutes typically sees very little activity. Okay. So on a 5-minute chart, what we have is we have a 5-minute close below red and falling, put things in motion to the downside. So this is what we were looking for here. Okay. We were looking for this candle to close below red and falling. The only obstacle it had to deal with were these swing lows right here. Okay. This was a view of the 30-minute slingshot at the same time. Red starting to turn down and about to cross that 50-yard line. That's bearish. That's bearish. It's a 5-minute bearish price chart. 5-minute or 30-minute bearish slingshot. Red and falling, dropping below the 50-yard line. That's the white line. Confirms the market is attempting to move lower. Over time, you will learn to not only watch multiple time frames, and I don't really think you need more than 2, like a 30 and a 5, but those numbers aren't magic. Yours could be 15 and 5, or yours could be 15 and 1. It can be whatever you want it to be. Whatever you're willing to invest the time in watching so that you can begin to hear the rhythm of that market in that time frame. So, have we gotten a close yet below red and falling? Nope. Price is attempting to overcome the obstacle created by these swing lows. See, I drew a little line across there. So now, price not only has to get below red and falling for a continued down move, it's got to take out these swing lows, which will then lead us to another obstacle, these swing lows. Wow, it seems like there's a lot of obstacles out there. Well, they are, but the market overcomes obstacles every day, all day. Now, I said this earlier, but let me go over it again. Keep in mind, what we do is portable. Everything we do is fluid across all markets and all time frames. While many people prefer a particular market, it's nice to know that if your preferred market is not presenting you with a high probability opportunity, you have the luxury, if you choose, to scan everything from the S&P to Amazon to bonds to pork bellies to find a market that is offering a high probability, low risk opportunity. David says, still waiting on your response, Mike. Dwayne, the tutoring still missing a tool to show the selling or buying pressure. I'm not sure which tool you're referring to, David. I can see the buying and selling pressure on the chart that I use with the indicators that I use. If you have some kind of tool that works for you, that shows you buying or selling pressure, and if it's working for you, by all means, you should use it. I just, this shows me, I mean, when price comes down and can't take out this low, I understand there's buying pressure. And when price gets below the BBC right here, I can understand that there's selling pressure. And as we get back to support, buyers push it back to resistance. Resistance sends it back to support. Support sends it back to resistance. So, yeah, we are minimalist when it comes to indicators. I mean, what you see on the chart right here, right now, I mean, this average true range, the volume, that's not even part of our indicator set. I've just got them up there to kind of help folks understand about this average true range business and how big the volatility is right now. Okay. So anyway, back to the discussion. Mike said, you said if this happens, looking at 30-minute, that should start a new leg down. Oh, if price runs into resistance, your question again, what did you say sets up the next leg to the downside? Okay, well, I'm not sure exactly what I was referring to, but right now the market is positioned for a move to the upside. If price closes below the BBC, then that sets the stage for a move to the downside. That's the same over and over. That just repeats itself again and again and again. Okay, price pulled up to the BBC. It got rejected. That sets us up for a move to the downside. Price gets above the BBC. We're looking for higher prices. So if I was talking about this particular chart, getting below the BBC, getting below this important area right here, 2451, then that's the market showing us that it's heading lower. The market is always on a mission. Even when it's going sideways, when it's trapped in a range, it has a mission. And your job, if you so choose, is to learn to discern what the market's current objective is. It's either trying to get to the zone overhead or the zone below. And when price is straddling a weekly trading zone like this, the market is trying to make up its mind. At the turn, you can see selling or buying with the accumulation distribution. Yeah, we just don't. I just don't use those kinds of tools, David. They don't help me. They don't benefit me. I'm able to put on and take off trades because Michael and I both went the other direction when we first met back in 2006. We had every indicator under the sun, every possible thing you could imagine, and then when there was nothing left to buy, we just started writing our own. And we soon realized that we were on a path to self-destruction because more stuff wasn't helping. I mean, I have no doubt that the tool you're speaking of, I'm sure it does exactly whatever it was created to do perfectly. But I bet there's days when you look at it and go, oh, it didn't work today. Oh no, it worked. It always works. It does whatever it was told to do based upon the parameters it was given. So under these conditions, these parameters, do this, don't do that, can't you read the sign? So, yeah, we're minimalist. Anything that doesn't directly contribute to my bottom line, I just don't use because I'm easily distracted, I'm easily confused. So the fewer things I have giving me conflicting information on a chart, Yeah, I just don't use. And again, I used to be the exact opposite of that. I was always on the hunt, always looking, always Googling. Man, there's got to be one more thing. There's some filter, there's something out there that's just, I'm one mouse click away from greatness. It's out there, gonna find it. Turns out I was looking for a black cat in the dark that wasn't even there. So I could take all of these indicators off the chart. And I mean, price action tells you what the market's trying to do. This minimalist set of tools that we use, I do find very beneficial. That's why I use them. They make the obvious obvious. And it's especially beneficial for new people who don't understand price action, who are just learning how markets work. So, okay, so back to the discussion. Where'd it go? There it is. While many people prefer a particular market, it's nice to know that if your preferred market is not presenting a high probability opportunity, you have the luxury, if you choose, to scan everything from the ES to Amazon to bonds to pork bellies to find a market that is offering a high probability, low risk opportunity. It's that simple. If you understand our methodology, our strategy, and it's not showing up on the ES, if it's not giving you that opportunity, you can wait until it does show up, or you can go look at any other market. Because all markets work the same. Yes, they have different personalities, etc., but I'm not looking to get into a relationship. I just want to put on a trade, reach my goal for the day, and be done. Okay. And there was a post from Joseph about some 128 arrows. I don't do the 128. But thanks for sharing that. So here we have support holding, price approaching the trend line and the 5-minute BBC. And then a comment from Amon. Teacher, because of you, I could actually hold a conversation with one of the bond brokers from Wall Street. Yet he didn't have an edge. Just felt great having a tiny bit of wisdom. I'm happy for you, Amon. That's really good. It's just your clouds are parting. 30-minute price reaching up to red and falling. Okay? That represents resistance. So what will happen is one of two things. If price can close above red and falling, then it's going to try to reach up to the BBC. Is that a counter trend opportunity? It is. Are counter trend opportunities legitimate opportunities? They are. They just don't have the same high degree of probability as a trend trade. Some people specialize in counter trend trades. That's all they do. Okay. Okay, 8 minutes to the end of the session. So this was 8 minutes until 5 p.m. Eastern yesterday. And then I commented back to Amon. Those of you who've been a part of CFRN for any period of time, you most likely have more knowledge of how markets actually work than most of the traders on Wall Street. Period. Yes, price is at the 5-minute BBC and the 30-minute is at red and falling. However, taking action is probably best after the market reopens. Okay, so this is what it looked like at the close, 5 p.m. Eastern yesterday. Then it started to fall. Okay, 5 minute, we get up to the BBC, which we expect to be good resistance. But look what's below. Blue and climbing, which we expect to be support until proven otherwise. Support. Okay? So we go from support to resistance, and from resistance, we're headed back to support. So I said, watch out for blue and climbing below, because that represents potential support. And then we're talking about the world in general at the moment. As tragic as the situation at hand is, empires will crumble, dynasties will be born. The world has a new normal coming. So then I took a break. During the break, I said, typically I point out the next logical move. When I get back to my desk, I'm going to highlight an illogical move. The definition of logic pertains, of course, to the time frame that you're using. It's not possible to observe every time frame at the same time. It's also what keeps many traders chasing their tail. You have to define your time frames and your parameters in order to define what is logical or illogical based upon your methodology. And our alert service is, it's where the name came from, Logic 247. It's a logical solution to solving the market equation around the clock. The Concierge Trade Alerts is a static report issued every evening shortly after the Globex Open. And that's based on previous price behavior. Logic 247 runs around the clock. It's based on current price behavior. So you could just as easily get a signal at 2 a.m. or 2 p.m. If you don't want to be trading at 2 a.m., you just turn notifications off on your phone. And when you're ready to trade again, you turn notifications back on. And all the stuff that's backed up in the pipeline while you were sleeping, because important prices in important areas are almost always tested. When you sit down to trade, you don't have to go hunting and pecking through a million charts. You got a pipeline filled with opportunity right there, waiting for you to go to work on. Can buyers or sellers show up unexpectedly at any time? Yes. Our strategy and methodology simply shows where the next logical spot is for them to show up. It's the difference between being a fortune teller and an analyst. Logic dictates. Now, I'm using logic two different ways. I'm using logic here to identify our methodology, but I'm also using it as the Spock kind of logic. It's all the same anyway, I guess. Logic dictates that the candle under the arrow, that's this one right here, after closing below red and falling, which it did right here, typically would have dropped price closer to the previous swing low. Here, bottom of the window. However, buyers showed up early, unexpectedly, creating a new level of support, driving price up to the 5-minute BBC. So, whereas on the open of this candle, right, we closed below red and falling. So on this candle, I would anticipate price continuing down at least until we near this area of well-defined support. That's not what happened. Driving price up to the 5-minute BBC, which it did as evidenced by the wick now sticking up above the BBC. So buyers came in early here, unexpectedly, Once this candle closed below red and falling, my logical expectation is that price would continue down to this previous area of support. However, buyers came in and created a new area of support. Price goes up to where we expect to find resistance. Now remember, this was a big green candle at one point. But by the time the 5-minute period was up, price closed right at the BBC and left this wick sticking up above, which is bearish. But below us we have blue and climbing, and that's bullish. So even with just a few indicators on the chart, you'll come to situations like this, which we don't see as a problem. We see it as, we understand that, okay, price now has to make a decision, okay? Is it going to get below blue and climbing and come back to challenge this swing low and then this swing low? Or are we going to see a reversal? Okay, I already covered all of that. Price is now pinched on the 5-minute between blue and climbing and the BBC, right there. So this is an important area that price, it's got to be a decision. Yeah, we could go sideways for a while, but at some point, notice over here on the 30-minute, we're just closing that window. First we closed that window of opportunity, and now we're closing that one, okay? No magic there. Just, again, just how markets work. So, so price gets pinched up. The 30-minute, at the time I snapped this, which was 1 minute. Now, this is Pacific time. So this would be 6:11 Eastern. So the markets have now reopened for the Tuesday session. 30-minute supported further decline at this point. We're now back to dealing with the same area of new support, which is right there. Okay. If swing lows on the above charts fail to hold, look for support at 2320/2325 on the way to the next weekly trading zone. Okay, so you see how here's the 5, price is pinched up. Here's the 5-minute again. Price is moving below that blue and climbing, even though it's below the BBC. Below the BBC is bearish, but we have this potential support with blue and climbing. So then I push it back out to a daily just to kind of get everybody, perspective in check. Any rally attempt should be met with selling pressure at the 30-minute BBC, which at the time was 2460. Current average true range of a 30-minute candle based on the last 100 candles is 33 points. And this is where I talked about using the ATR as a stop-loss strategy. This is available to anybody to read. You just have to take the trial. Stefan had posted some information yesterday regarding the limits down and what percentages. And I came to the conclusion on Globex, a 5% drop shuts it down, period. Last night we were dealing with we were locked limit up as opposed to down. Then we offered this opportunity, counter trend, 2440 to 42 to 48 to 60. That's all inside of this little window right here. 30-minute counter trend. 2430 to 2440 if you want to enter sooner. Keep in mind, it's a counter trend. And we took a peek at crude. Crude seemed to be very comfortable, just trading sideways there at the weekly trading zone. 5-minute ES. Crude, support and resistance defined on a 30-minute chart. Resistance sends us back to support, back to resistance, back to support, on the way to resistance. And Arturo shared with us the upside and downside limits. So we went from here, price now testing resistance, right? Weekly trading zone overhead. That should say crude. Based on the prices here, that says ES, it should say crude. That's roughly a $1 per barrel move, or $1,000 per contract. And yes, sorry for the typo, it was Angel. In fact, I should fix that. Oh, it's on my mind. Okay, here's Stefan sharing one of his charts. ES 5 minutes squeezed up at the 61.8% retracement area from regular trading hours. That's what RTH means. Market has to make a decision here, or should make a decision here. Okay, so we had a window of opportunity below us. Now we're up against resistance. So price will either, from this point, trade back to support, or we'll take out this resistance. 2880 to 2870 to 2860. A more aggressive approach would be 2915 to 2905 to 2895. Then Bill B posed an interesting question. What was the actual open on crude yesterday? I have 3 platforms and 3 different opening prices. Bill, I don't know if we ever got you an answer to that question, but if you still need an answer, ask Bert, 866-928-3310. I don't know why your 3 different platforms would have 3 different opening prices. Stefan and I seem to think along the same wavelengths quite a bit of time. Now this window, which you first see it up here. Well, I guess it's right there. Okay. Remember I said price either will attempt to come back to support, which means the trading opportunity represented by this window. If we go back to support, that would be consummated. But price chose a different path. Instead of, once again, returning to support, it broke through resistance. Remember, that has to happen. Previous support and previous resistance is continually being broken. Otherwise, we would just have a stagnant market that never went anywhere. Okay? So a given area of support or a given area of resistance will hold for a while, but eventually one or the other, the support or the resistance, will give way. And of course, I'm sure you've heard what was previously support can become resistance and vice versa. Okay. And then I posed the question, did we just go limit up on the ES? And the answer was, yeah, we did. Okay. Crude at the 30-minute BBC. I'm thinking we just saw a head fake to the upside. I'm waiting for price to close below the 30-minute BBC. If it actually holds, we'll look at the other side. So now, remember the untouched window? So what we've done now, price, remember I said, so we went from resistance to support to resistance to support to resistance. And then I said, from here, price will either go back to test support or will break through resistance, which it did, and in doing so, set up a new range of support and resistance, and what was once resistance became support. This dynamic happens over and over, again and again, day after day, all day long. It's how markets work. If you take nothing else away from today's broadcast, write this on the tablet of your heart. Okay? What was once resistance, price tried to get through it, really tried to get through it, finally got through it, and then this area that we could not break through became good support. And this was just a little long trade on the S&P from, looks like about 25, I think it was 25.05 up to 25.18, which was supported by the slingshot. This is the 30-minute. Crude on a 30-minute, same thing, looking for a long move to the upside. Actually entered back over here, so I wasn't crazy to see red and falling show up here, but it did, and we have to deal with these things. TradingHours.com. If you ever wonder when a particular market's going to open, the London, the Asian, whatever the case, just go to TradingHours.com. You don't have to remember the rest of it because it's all self-explanatory once you get to the page. Then I welcomed Elon, and then he posted spam, and then I said goodbye to Elon. Okay. All right, very long show today. Let me show you one last thing, and then we're out of here. Okay. All right. So far this week on Logic 247, only 11 alerts issued so far. One never triggered, one voided. I duplicated one. 2 ladies in waiting. So we've had 7 actionable alerts. Nothing stopped out so far. So 7 have hit their target. That's an unusual week. We average, over the last 85 weeks, we've averaged about 20% get stopped out. Okay. Again, so far this week, there have been fewer than normal alerts because of the extreme volatility. But from a percentage basis, it's worked out well. So price, back to the 30-minute one last time. Okay. Bullish cross. Price pulled away. It didn't quite completely fill that window. Pulled back to the BBC. We all watched it together. Okay. The question becomes, will it hold or not? Or even better, will it work? No. Remember, your indicator always works. If the code compiles, the indicator is working. It may not produce a profitable trade, but then again, why would it? All indicators lag the market. They do a great job of showing you what's already happened. They can't predict the future. They can help you understand what the next high probability move is, and that's what we use them for. That's why they exist for us. Okay? So that window, remember, if you missed it, you can hit the rewind button on the if you're on YouTube, you can rewind it. Remember I said, imagine in your mind, if you can, that this candle continues down and meets up in this circle. Imagine, if you will, price and the BBC and the WTZ all meeting up Isn't that amazing? It is kind of amazing, right? But we're not going to get carried away with ourselves. It's simply an example of how markets work. Okay? And once you understand that, this still doesn't make trading easy. But it's sure a lot simpler than trying to do it the other way. You know, whatever the other way is for you. If it's a struggle, if you're confused, if you feel lost, if you just need somebody to talk to, book a mentoring session. If you're on the trial, you get one free. If you're already a member, you have unlimited access. You can reach Valerie at 949-42-EMINI or email her support@cfrn.net. So the fact that price did the next high probability thing is really not a surprise because it was the next high probability thing. Had it done something different, well, that's a horse of a different color. Tale of a different story. This is what we expected to happen because of our understanding of how markets work. We always expect the market to do the next high probability thing. Sometimes it doesn't. Okay? Sometimes it doesn't. Good word for the day. All right. Here we go. No small matter. Isaiah 11:2. And the Spirit of the Lord will rest on him, the Spirit of wisdom and understanding, the Spirit of counsel and might, the Spirit of knowledge, and the fear of the Lord. Isaiah in 11:1-4 said this about Jesus. Now remember, Isaiah is Old Testament. Jesus is New Testament, but he's also Old Testament. Isaiah said of Jesus, out of the stump of David's family will grow a shoot. Yes, a new branch, bearing fruit from the old root. And the Spirit of the Lord will rest on him, the Spirit of wisdom and understanding, the Spirit of counsel and might, the Spirit of knowledge and the fear of the Lord. He will delight in obeying the Lord. He will not judge by appearance, nor make a decision based on hearsay. He will give justice to the poor and make fair decisions for the exploited. The earth will shake at the force of his word. Now you say, well, that's all very nice, but how does that influence my life? Well, perhaps more than you can think. When Jesus Christ sits on the throne as the ruler of your life, the Spirit that rested on him will rest upon you as well. With that in mind, think about those words slowly and thoughtfully. If you see evidence of them in your life, nurture them with prayer, water them with the Word of God. And if you don't see any evidence, well, get down on your knees and pray. Father, let me be a signpost to Jesus. Before you buy a car, the salesperson usually lets you test drive a demo. Chances are, if you like it, and the price is right, you'll buy the car. We are all called to be a demo for Jesus. And that's no small matter. Why? Because in the final analysis, your words, attitudes, actions, and reactions either drive people away from Christ or attract them to Christ. So what's it going to be? That's our good word for the day. It's a long show today, guys. Thanks so much for tuning in and hanging out with me. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.